Allison here with your midweek update. Of course, this week what was in the news was the Fed announcement coming up. Now, whenever we looked at it last year, it looked like we were going to remain hawkish with 2 more hikes headed into 2019. This in turn actually caused the market to tumble a little bit more going into the end of last year, and it looked like we might have started to go into some bearish territory. The Feds quickly started to look at that, as well as some other economic factors like the global slowdown and unemployment, and have recently decided to switch their view to where now the majority of them are looking for no more rate hikes going into this year. That, of course, caused a happy bounce in the market intraday. So let's go ahead and take a look at our chart so you see what I am talking about. Now, as we can see here on the monthly chart with SPX going into the end of last year, we saw this heavy move down, which also was contributed by the Fed news. We actually started during the month to break some of our main support levels, which the last few times that we broke these levels went into a heavy downturn within the economy. That started to shift view going into January, and with the Fed news starting to decide to be a little bit more conservative and not have those rate hikes, that in turn allowed a nice bounce up as we continued within this month. When we take a look at our intraday charts, you can see here what happened directly from that news. We had a little bit of a downturn today going into the announcement, but as soon as the Feds came out confirming what the market was thinking, that there were going to be no more rate hikes this year, we ended up seeing a nice bounce to the upside. Now, of course, on the intraday charts, we are starting to get to some resistance levels, but notice particularly here on the hourly, we have reset on our momentum. We have 2 breakout signals to the upside, so I wouldn't be too surprised if we saw this continue in the next few weeks for a potential higher highs as we try and go back and retest our all-time highs within the S&P. Now, what does that exactly mean for the rest of this year? It doesn't mean that we won't see any more rate hikes, but as of right now, the Feds are definitely remaining more conservative. Now, as I mentioned, a part of that is, of course, due to the global economic slowdown. We're also seeing that the S&P has cut its full-year profits down by 3%, so they're being a lot more conservative, and of course, unemployment looking like it's inching a little bit higher compared to our previous numbers that we had earlier this year. Because of all that, the Feds have decided to cut back, and in turn the market has remained euphoric on that news and is looking to go back and test those all-time highs once again. Now, will it happen within the next month? That's hard to say. I think it will probably take a few more months to go back and kind of test those levels, but if we are able to move above them, I would expect the bullish pattern to continue from there. Thanks for joining me, guys. As always, may the trade be with you.